I think that there is, it's important to be watching what are the intentions, and the fact that Trump and President Xi both seem to want to make a deal. Whether we'll get a deal that answers every question that we need and the intellectual property, all of those obstacles, those are big obstacles, but I do think we're making headway there. It does come at a time when there is more uncertainty in Washington, D.C., namely around the government shutdown. Now, as a strategist, we are trained that a shutdown is not really a market event, but I would point out that the average shutdown has been a little over a week. If we do head through this month into the, potentially even through the first quarter, we could see an impact on growth. So you have to just be aware of those risks that are still out there.
The context of these headlines, Josh, and you know this well, is that maybe Trump needs some sort of a win right now at a time when the government shutdown goes on a record-long streak, at a time when the U.S. economy is starting to show signs that the trade war is actually taking effect. China also is in that sort of political position where it needs a deal as well. So for the first time, we've got both leaders who may be under pressure to come to some sort of agreement. Yeah, so I think that China, a little bit of nuance, I think China is not in a political position where it needs a deal, but they are in an economic position. Yeah. So maybe it's the same thing. But I do agree with everything you said, Melissa. And I actually think that something that looks like a ceasefire in the trade war is going to be a big upside catalyst to the market. And I think the market is sniffing that out. And it seems to be kind of grinding into that possibility. But bigger picture, I'm still in the retest camp. I still think we will revisit. Lows. I do. And I'm going to tell you that, look, this bounce has to be respected, and you have to be open-minded here. So I'm not like saliva flying, pounding the table. But I'm going to tell you, you have a 6.5% gain in the S&P this month, which has to be respected. You're up 14% off the Christmas Eve lows. Again, got to stay open-minded. And the last time you had a rally that powerful in such a compressed period of time was October 2011, which was, in fact, a definitive turn for the market. So I'm not telling you we're going to have a horrible year, but I do want to point out, even with this huge oversold bounce, and we were so oversold that it had to happen, you do not have a cluster of new 52-week highs. In fact, you've got just one S&P 500 name making a new high over the last couple of weeks on each closing day. That is very weak action. Additionally, only 35% of S&P 500 names are above their 200-day, which tells you that 2/3 of the market is still in an individual bear market. And the best thing I could say about that is, okay, that's what it should look like in the early stages of a new bull market. And if that's what ends up happening, I will remain open-minded, but I still feel we're in trouble.